What's going on?
There you go, Ryan. Okay, I try to be like the same like head distance as you. So
Perfect.
anyhow, thank you, Ryan. Everyone, this is Ryan Thomas from NorthPoint Mortgage. If you don't mind, Ryan, just give us a little bit of background, how long you've been doing this, and love to hear about you.
Yeah, so I started doing mortgages in 2002. So I bought my first house. I was all excited. Happy first time home buyer, FHA loan, no down payment, not great credit. And yeah, I had a pretty bad situation, and I was about to go to law school. I just graduated from college, and I looked at my wife and I said, "How hard can this be? You should be able to do what you tell people and answer the phone when they call you." And lo and behold, I got into mortgages and owned a company. I owned my own mortgage company when I was 23 years old.
Oh,
So
wow, what a
it's been a
story.
while.
Wow, what a
Yeah,
story. That's good.
yeah,
So there's a lot of changes going on right now in the
yeah.
mortgage industry. And so what are some of the frequently asked questions that you're receiving from people?
Yeah, more so than the frequently asked questions, it's that there's still people out there buying. There's still people selling. The market's still moving. And people are calling me, and it's hard to keep track of everyone. But a lot of people aren't qualifying right now that qualified 3 weeks ago. So the biggest question is, and that's pretty known around the industry now. It's getting out there through Facebook and internet and so on, the news. So a lot of people are calling me and just asking, "Hey, you pre-approved me. Do I still qualify?" And right now, a lot of them don't. So the biggest question is, what can they do? How can I help them? How can we get them in a position so they can qualify again?
Right.
And so that's it. And then the other big question we're getting from everyone is, I got furloughed, I got laid off, I got this thing. How do I go about not paying a mortgage payment? So I'm getting a lot of those questions and trying to give people the best advice I can.
So let me ask you something. You have someone in the process that is being approved and they didn't become risk all of a sudden because guidelines changed
Yeah.
and then they got furloughed. How does that affect the person that's in the process as far as
Yeah.
getting
So
approval?
so so if you're furloughed or laid off during the process, even the day before closing, and unfortunately it happened to me. I've had 6 people already that it's happened to. One on Thursday, clear to close. They had all their final numbers. They'd already wired money to the title company. And a little after noon that day, they got laid off. They were closing Friday at 9 a.m. And we weren't able to do the loan. We had to stop it, buyers, sellers, everything. Good news is they just did an extension, and the sellers are going to wait for them, and hopefully they go back to work. But yeah, it's difficult. So the real issue is when you have a mortgage, and a lot of people don't really understand the process. So if you don't mind, I'll just kind of explain it.
Sure, I love it.
Um, when someone gets a mortgage from a bank or a lender, that mortgage gets insured. It gets insured by Fannie, Freddie, FHA, VA, USDA. If it's not getting insured, then it's called well, there's all kinds of different words for it. We don't use the word subprime anymore. But it's an alternative mortgage. It's an in-house mortgage. Portfolio is thrown around a lot. And what ends up happening is mortgages get sold on the secondary market. We do them as mortgage-backed securities.
Mhm.
So what happens is mortgage companies will take these loans and they'll sell them on the secondary market. So when that happens, the servicer gets the loan insured. For example, let's just use Freddie Mac, for example.
Mhm.
I do a loan, I sell it directly to Freddie Mac. They insure it. They sell that loan on the secondary market and they pay investors and they get a servicing fee, or whoever the lender is gets a servicing fee every month of the interest to service the loan.
Mhm.
And what happens is a lot of people, and Donald Trump, for example, mentioned, "Hey, everybody, you don't have to make your mortgage payment for 3 months, up to a year. Everything's going to be okay." But they didn't give any direction to any of the servicers or to any of the banks. So it's kind of up in the air. So what does that mean? What does it mean not to make a mortgage payment? Well, if you don't make your mortgage payment, then the bank still has to service that loan and they still have to pay on the secondary market. So when that's happening and you're not paying them, how are they paying that money? Well, the banks didn't get a bailout this time. Everyone knows the banks got a big bailout not too long ago. But they didn't get any part of the bailout. So they say that if 25% of Americans don't make their mortgage payments for 3 months, it will cost the banks $40 billion
Oh,
in
wow.
just those 3 months. So because of that, everyone is really scared. So Fannie, Freddie, FHA, VA, USDA, they've all said that if we a lender or bank gives a mortgage to a borrower and they go into forbearance or don't make their payment within the first 6 months or so, that we are then going to be on the hook and they will not insure or buy the home.
Oh, wow.
So that's put a lot of risk to investors and lenders everywhere. So all the biggest lenders in the country right now are really scared. So what they're doing is they're trying to protect themselves. So I like to compare it to, because I've been doing this a long time. I did this business when 9/11 happened. I did this business during the mortgage crisis, the housing collapse. And people keep asking me, how do you compare it? You really can't. It's just a lot different. I think I read a report today. I don't know if it's accurate. It was online, but 20 million people are now unemployed. That's almost the population of Florida.
Wait, isn't everything online true?
Yeah, right. Exactly. That's
Isn't
what I
that
hear.
right? The internet
Yeah,
is the
that's
truth?
it. You read it, it's true. But 20 million. Again, I don't know how accurate it is, but that's a lot of people, even if it's not that many. And so what's happening is all of these people are immediately like, hey, I don't want to make my mortgage payment. I don't want to do this. I want to get a furloughed. The president said we can't hit your credit. You're not going to have any fees, any penalties. But again, they're not doing anything for the banks. And Fannie and Freddie and FHA and so on have all come on and said, hey, we're not going to insure these loans. So now all borrowers have to sign a piece of paper at closing saying I have not been laid off. My hours have not been cut. I do not anticipate having to be furloughed. I do not plan to ask for forbearance on my loans.
Interesting.
Yeah. And you can't hold people to that. You're making them sign it, but there's nothing to hold them to. It's just, hey, we want good faith from you. You're going to make your mortgage payments. So then what all the investors have done is they said, hey, look, we need to take our risk. So who's the most risky people to not pay their mortgage? Mm-hmm. People with lower credit scores, people with lower mortgage payments, people with lower down payments, people with less assets. Those are the people. So now, and to go back to before, like let's go back to 2007, when the mortgage crisis and the housing collapse happened last time, it was a very slow progress. It was, hey, all right, we're not going to do this anymore. Oh, we're going to pull back on this. Oh, we're going to add this layer of risk, and we're going to do this and this. And over years, I mean, that mortgage crisis really, in my opinion, went until about 2010, 11.
Sure, absolutely.
Some people say earlier, some people say later, but in my opinion, that's when it really started to turn. So it really lasted, in my opinion, for about 3 to 4 years. I mean, it lasted 9 years, they say, but in reality.
Right.
So in about 2010, guidelines started loosening up, and it was a very slow process. This time, it was like, boom, light switch on. We're not doing this, and every day. So
it's like they got rid of all the risk.
They did. So for us, for our company, we're not doing government loans under a 680. To put that into perspective, on average American credit score is about 686. So that means that you've got to be average or above, basically, to be able to get a mortgage with a credit score. Now, a lot of people have had medical and other little things that are affecting their credit. Some people don't have credit cards. They might have high balances. Right now, more than ever, people might have higher balances on their credit cards. Yeah. So if you're above a 680, you don't qualify for a government loan, which is crazy, because if you're above a 680, I'm probably not going to put you in a government loan anyways. I'm going to put you in a conventional.
You mean below 680?
Yeah, no, 680 and above is all we can do.
Right. Okay.
So, but if you're above a 680, I'm going to put you in a conventional loan anyways. So they're basically saying we don't want any government loans.
So are you doing a 680 on FHA too?
That's it, 680, FHA, VA, USDA, and there's a lot of restrictions. So just to put it in perspective, 3 weeks ago, I could go to a 530.
Right.
It's a big difference. And then to put it into more perspective, we used to go to 56.5 debt ratios on FHA. Mm-hmm. That's now been restricted to 50. If you want to go above 50%, you've got to be above. Just to give you an example, it's a little crazy, but if you want to go above, you have to be above a 700 credit score, and you've got to have 6 months of reserves. That means your mortgage, taxes, and insurance times 6 months. Or you have to be paying that currently on rent or a mortgage and not have a payment shock. So those are the type of things that loan officers are dealing with today. And if you're not keeping up on all the different overlays and all the investor risks right now, a lot of people are going to think they can buy a house right now and they can't. And that's just some examples, but yeah, it's been pretty crazy. But for me, again, I've been doing this 20 years. So I've seen this happen twice. I've just never seen it happen so quickly.
Right. Well,
But
yeah.
we got to adapt.
Well, it definitely is something that the banks have learned from the last time, that they know, first of all, give them forbearance to people in hardship right away, versus last time it didn't seem like they were as willing, and that's why it took forever, one of the reasons. But well, no, I really appreciate. Go ahead.
The big difference this time versus last time is this time the banks are saying, and they're all different because there is no guideline from the federal government. So every investor is different. So my advice to anybody, pay your mortgage, pay your mortgage, pay your mortgage. I can't say that anymore. Just pay your mortgage. If there is any bill that you have that you can pay your mortgage.
Right.
Everything else, we can fix it. Anybody can fix it.
Right.
But try not to get behind on your mortgage. And there are a lot of investors that are giving 3 months forbearance, but instead of putting it on the back of the loan or modifying the loan like they did a few years ago, they're giving you a balloon payment and saying, okay, month 4, you owe all that money.
Oh, yeah, that's something to be aware of.
Can you imagine, your mortgage payment's $2,000 a month. You lose your job. You can't make your mortgage payment. You don't pay May, June, and July. That's $6,000. And in August, maybe you're back at work now, maybe you're not. And your mortgage company's going, all right, you owe us $6,000 plus this month's mortgage. So you owe us $8,000 by the 15th, or we're going to start reporting you late and maybe foreclose.
Right. So that's something they need to be real sure of when they're offered the forbearance, that's what they know, the fine blue print of the box.
Yeah, exactly. So it's a little scary. So I just tell people, just do whatever you can. Try to make your mortgage payment. Rates are low.
Right.
Rates are low. So the reason why rates are low is because the government did something that they did back in 2008, 9, and so on. And they're buying all the mortgage-backed securities, which means that if we as a lender write a loan, we sell that loan and that loan gets sold on the secondary market. You don't have to worry about investors or regular people buying these mortgage-backed securities. The government is just buying them. So because of that, that's making rates really low. And what it's really done for us is it's stopped the volatility. The biggest issues that we faced as a mortgage company in the last couple of weeks is volatility.
Right.
I've seen interest rates move in a day. I've seen the mortgage-backed securities move in one day that they didn't move in an entire year.
Right. Yeah.
But now that the government is throwing money at it, now that they're buying all the securities, that is really helping slow down the volatility. We're not seeing rates jump up and down as much. It's a little bit more normal. And rates are really good. So what I'm trying to tell people to do is pay your mortgage. If you're still employed, refinance.
Right.
Refinance. If your credit's pretty good, you're going to be in the low 3s on a 30-year mortgage. And if we plan it correctly, we can also make it so you don't make a mortgage payment for 2 months.
Right. Yeah.
Which is really buying people an opportunity to skip mortgage payments. And the way you do that is, say you called me to refinance today, Jeanine. I'd be like, perfect. We'll get you done. We're not going to close you at the end of April. We'll close you in the beginning of May before your May payments due. You skip May. You don't make June. Your first payment's due in July.
Right.
And that's a way for people to not only get a better rate, save some money, but also free up not having to make a mortgage payment for a little bit. So, I'm trying to help as much as I can, but if you've been furloughed or laid off, there's just no way to get a mortgage right now.
Well, Brian, we appreciate you being the guy in the know. And if anyone has any questions, what's the best way to reach you?
Well, tons of ways. You can always email me. It's rthomas@northpoint.com or call me 407-440-0762. But I highly recommend just look me up on the internet, Ryan Thomas, NorthPoint Mortgage. We all have a NMLS number, which is basically our identifier.
Right.
Mine's 3799. Okay. So pretty easy to find me.
All right. Well, we appreciate your time and giving us all this great information, and hopefully it's helping someone out there that has these questions. And you have a great day, Brian.
Well, thanks, Jeanine, for having us on. I appreciate all you do.
All right. Bye-bye.
Bye.